Well, for more global markets insights, we're joined now by Professor David Costa. He is Dean at Robert Kennedy College, and we have here in Singapore Niku Haraji, CEO at N1 Asset Management. Gentlemen, thank you very much for being with us. Niku, let me start with you first. We had a nice rally going on in Asia. A lot of people were optimistic that maybe the fears, the uncertainty about the US were overdone. They're stepping back in, seeing a nice rally going on. Does this mean that somehow maybe the second quarter could look a bit better?
Well, we're seeing a rally today, and what we think is that the rally is only going to be short-lived. We think that this could be a run in a bear market. We think that we have been seeing on an ongoing basis since the fourth quarter of 2007, we've been seeing that corporate earnings are not coming out as strong as we anticipated, and we haven't seen a lot of figures coming out for the first quarter, or obviously it's too early, but we don't think we're going to see any upside surprises. So, as I said, I think we're going to see scary surprises. I think we're going to see a very choppy second quarter, and we don't expect anything good.
Well, picking up on that note of scary surprises, David, Bertha here in the U.S., I want to ask you, 2 weeks ago today, we saw the implosion of Bear Stearns. Lots of rumors this week about Lehman Brothers being in trouble. The banks are going to the discount window a bit more than people thought they would. Is this financial situation still too tenuous and still scary, if you would?
Yes, I would say that in terms of financial, it's one of the few sectors where we should stay away at the moment. It's too clumsy. We cannot understand what is the reality inside the balance sheet. So at the moment, unfortunately for the financial, it's still time to hold. But I'm not as bearish on the other sectors. I don't think that we're getting into a bear market. I think that the financial are pretty much confined to their own sector.
But David, until we sort out what's going on with the financials, it's very harder, isn't it, for the broader market to do anything, or for anybody to generate any confidence and develop some risk appetite?
Yes and no. I would tend to agree to a certain extent that obviously the financial have a strong impact on pretty much every market. However, we can still find equities which have not been impacted almost at all by the current crisis. So what I try to say is that it's harder to find good investment opportunities, but it's not impossible. I mean, let's not forget that a couple of years ago you could pick pretty much everything and it will go up in a month or two. Now it's a bit harder. And the money managers have a bit of a tougher time to find the right investments, but it's still possible.
Niku, do you agree with what David just said? Is it harder to find opportunities? I mean, what are you watching as an investor? Are you watching dollar-yen rate, whether it falls below 100? Are you watching oil prices, foreign inflows? What exactly is influencing your investment decision?
Well, from our point of view, I mean, it's been a very difficult first quarter of the year. We've stayed out of equities. We are not in equities. We have been looking at hedge fund managers that has been market neutral equity hedged. We've actually have some positions in our fund that has gained more than 10% for the year. It's been much harder finding managers generating alpha in this market environment. But we are looking at fund managers that are not correlated to the current equity markets. I'm going to talk about the current equity markets. Looking around at the last 6 months, we're trying to have uncorrelated positions in our fund.
David, I'll put the question to you. So Niku's staying away from equities. Are you staying away from equities? And you say it's hard to find those situations, but where are you finding the opportunities now?
There are opportunities. I think staying away from equities, it's giving up an opportunity. Now, again, a couple of years ago, it was extremely easy to manage money on the equities market space. You could buy pretty much anything on the index, and it was just set to rise. Now it's a bit harder, and it's time to make the bankers, and the investment managers to use their brain and be worth their commissions. It's not as it used to be, but you can still make money, particularly in equities. I was just looking yesterday, and there are great opportunities of companies which have been not as affected on the market at the moment, and many sectors are pretty much bottoming up. So if you give up on equity, there are different sectors. No, manufacturing, for example, consumer products, non-cyclicals. There we have few examples of companies which have, still returned over 6% over a year base, and even year to date over that. So you still have opportunities in every sector pretty much, but particularly consumer products which are not as largely affected. So you just need to pick the right thing, but it's not impossible, absolutely.
Niku, one of the things we had seen, of course, in this quarter was this sort of dollar gold oil trade. Do you think when we get into, in the first quarter, do you think when we get into the second quarter that's going to be put back on or not?
I think that we're going to continue